concept that we often talk about internally as systematic managers, Darius. You know, how do you weigh what you do as a quantitative investor is you try to minimize your own behavioral flaws and
Hmm.
maximize the understanding of the structural inefficiencies that created your models that you believe are going to exist long term
Hmm.
versus the intuition that you create and garner over decades of being in the market,
Yeah,
right? That
totally.
blind spot that a lot of these, you know, like you just, there's two or three things that have happened. I kind of know that my intuition tells me this. I've seen this enough.
Hmm.
And you are, you know, it's an interesting thing because you are both quantitative, but you will unapologetically nudge something using your intuition. Have you thought about that in any deep way where you can articulate it and kind of, you know, really hone in on when and why? Or are you just kind of playing the game and your intuition kind of kicks in? Like, where are you at with articulating that?
I'd say 5 years ago, I was just playing the game. As I've gotten more experience and built out the process better and more robustly, I have ancillary tools that give me quantitative signals that allow me to essentially front run the main line components of the process. And so, for example, taking back to the deck, just one slide I'll share with you on that in that regard. So when we were making those pivots in early November, this dispersion table, one thing we track is month-on-month Sharpe ratio dispersion across 50 U.S. equity sectors and style factors. The reason we look at the upper quintile relative to the lower quintile, but what we're trying to find is the composition of the upper quintile and lower quintile, specifically if it's pro-cyclical or defensive. And the reason we do that on a daily basis is to identify, hey, what side of the table is the market maker on? Because what typically happens, and Stan Druckenmiller taught us all this going back to 70s and 80s, like the style factor leadership in the stock market is the world's best predictor. It's the world's best predictor of what's happening on a go forward basis economically. It's the world's best predictor of future changes in monetary and fiscal policy. And so, understanding, having this burned into like the back of my brain, like, okay, what leads, what lags in a pro growth or negative growth regime. When you start to see this table, so this table got very defensive in June. Like the upper quintile was dominated by things like low beta, mega cap growth, et cetera, et cetera. That was kind of the end of that
That was
first
in June, you
reflection wave.
said?
Yeah, that was the end of that first reflation wave. Going back to slide 9, like the peak of that reflation wave came, and then it crashed, and because sector and style factor leadership in the equity market sort of front ran that, saying, "Hey, look, we're done pricing in pure reflation for now." And it got very defensive. It got very pro cyclical again in mid September, and that was one of
Mm.
the things we used to say, "Hey, like, look, the market is not currently pricing in inflation from a dominant market regime perspective, but this dispersion table is telling me that it's going to be at some point in the next few weeks." And the converse is true in early November. After having been pro cyclical from basically mid September all the way through early November, it started to get defensive again. And to me, I was like, hey, man, this is the same analysis I used to front run the pivot back to reflation in September. Now it's telling me to pivot out of reflation and into something more defensive. And, the same analysis I show with the S&P 500, it's the same with most commodities and everything else. Commodities want demand growth. They want growth. They want to be in Goldilocks or inflation. You can get paid in energy and food and inflation, but your volatility on those exposures is going to be much higher. And so
Okay, so
knowing that,
I want to zero in on this.
yeah,
This is less of a like I get where you're at because we always again internally we have these conversations and we're like,
totally.
I see this pattern,
Hmm.
and then we're like, well, let's just go ahead and put that into the system.
Yeah.
You know what I mean? Like at some point, you've had two occasions in which you front ran the system.
Hmm.
At some
Well,
point,
not
you got to be like,
you're front
I'm
running
gonna
the
try,
system,
I'm gonna
knowing
create
that
a
this
system
is
around this,
coming.
right?
Yeah, it's not just front running the system because I feel like it. It's front running the system with this in mind.
No, but this is my point. You have your eyeballs are telling you some stuff,
Hmm.
and now you've discovered a pattern from your intuition. The question
Yeah,
is, are you going to then quantify that and embed it into the system? And is that the evolution of all quantitative models at the end of the day? It,
absolutely.